Good morning and welcome back to Almus Market Mornings. Markets broadly trade within the recent ranges as investors generally await some solid data from the US economy. Tech sector has continued to exhibit concerns, and I feel that the stretched valuation is driving some of the risk of sentiment. Let's understand what's going on. Morning, JK. What's your view on these recent moves?
Good morning, sir, Swaraj. So for the currency market, of course, we've been waiting for the official data on inflation and employment to be released by the US government. And, yesterday's number on jobless claims coming at high of 232,000 for the week ended October 18 did not provide much clue again, or reliability is much lower because it's a much older number. And even the continued claims, which almost hit last 4-year high, also give some concerns, but the market would like to see the latest number. So that I think we are still missing clues on the economy. Even the ADP private jobs, of course, which has been releasing a weekly number now, shows the job losses of 2,500 on an average per week for the week ended November 18. That is some improvement from the previous week. And sorry, that was a data as on November 1. And so that, but again, I think we need to see the official data, and we are going to get the unemployment report for September tomorrow. Um, I think that still leaves a lot of fog for the Fed in their data, in their analysis of the economy for the monetary policy decision. However, hopefully by December middle, when they meet for the policy decision, you would have an updated data on the economy as well. In fact, the December meeting might be still a very close one. Possibly we'll have three dissenters. That's the market expectation. Going by what several Fed members have been speaking of late, and three could be opposed to a rate cut, and three could be actually wanting a definite rate cut or more. So that's the way the monetary policy is divided, and it's a very tough balancing act that Powell has to do in the upcoming meeting. On the markets, of course, the US markets continue to correct, both on the core economy stocks in the Dow Jones as well as the tech sector. Uh, Even as the market rates key numbers from Nvidia tonight, and I think we are perhaps now not very far from, I would say, about 5 to 7% from the highs, and it can still correct up to 10% also without spoiling the uptrend. But any break below 10% will put the markets on a corrective territory, and that could be a bearish factor for the coming weeks as well. Now, on the currency market, there is focus on two currencies. One is the UK pound, where the CPI number will be published today. The CPI number assumes a lot of importance because there's been a lot of negative data from UK, but the previous month's numbers have been better. So, whether the CPI number will tilt the balance in favor of a rate cut is something that the market is seeing. But importantly, this comes ahead of a week UK government budget on November 6, 26, a week away from now. And in the current delicate fiscal position of the government, that assumes a lot of importance. We should not forget the huge volatility that we had seen, uh, 3 years back in September 2022, when the bond market as well as the pound underwent a huge volatility. And we wait and see how the uh, budget is presented, and it has a lot of implications for the economy growth as well as the politics. The other currency, of course, is again, which is now trading well above 155, earlier being touted as a benchmark for intervention from the Bank of Japan, but now clearly they have not intervened, even though it touched 155 half. And important points to note as far as yen or Japan is concerned is that yen has not participated in the safe haven buying. when the stock market has been coming off. The safe haven, the role has been given to euro and to some extent to the dollar as well. So the other point to note about Japan is that while yields are coming off, or rather coming down in most regions as the risk assets are getting sold off, Japanese yields have been rising steadily. So the Japanese 10-year yield is now at 1.77. That's a new 17-year high. 30-year is at a new all-time high of 3.3410. It does look as if the Japanese are not really keen on say a steadier Japanese yen, although there are some verbal interventions. For instance, now while Governor Ueda signaled chance of raising rates next month, the Prime Minister, who has been a huge fiscal spending supporter, has urged the Bank of Japan to cooperate with the government in effort to reflate the economy. It doesn't sound good for yen. So in that respect, I think dollar is still well supported. So I keep watching these two currencies. Of course, as we approach the year end, the currency volatility might be lower, particularly you know euro, the bellwether of the dollar index composition, is also moving in a range, and gold and silver, which have moved massively, are also in a range now. The positions being adjusted on both sides. Dips are getting bought, no doubt, because market has missed out on a big rally. However, upside there is also some profit taking seen in some of these assets, including the Bitcoin, which has now fallen nearly 30% as well. Now, coming to India, of course, the rupee has now shifted its range slightly to a better range of 55 to 65, and that is on the back of some modest flows that we have seen for the debt market, and that is something that we will be watching very closely, because as we reported yesterday, the sharp rise in India's merchandise deficit at 41 billion for the month of October raises the prospect of our current account deficit going up to 1.5, 1.6% in FY26. This is against 0.6% of GDP in FY25. So the higher current account deficit will be a source of more pressure on the rupee, particularly as we have been missing capital flows, which in fact has been negative to the tune of 23 to 25 billion in this year alone. However, there seems to be some light at the end of tunnel. Possible inclusion of Indian bonds in the Bloomberg's global aggregate index. That's they have been seeking opinion about inclusion of those money, which has 2 to 3 trillion of passive money being invested in the Indian bonds. Indian bonds have been fairly attractive, in fact, very attractive, as the inflation has dropped below 2% for few months now. And even if you remove the base effect, I think the inflation is possibly going to be lower than 3%, and that gives a very good real yield. If this does come about, and a possible decision in January is being indicated, market suggests that potential flow of 20 to 30 billion that India can receive if it does happen. For this, for the time being, of course, Indian rupee is moving in a narrow range. As I said, slightly better range now at 88.55.65. Entire moves are being dictated by the flows and, of course, RBI. Thank you.
Thank you, JK. And I think just summarizing, when it comes to the domestic markets, it seems that talks have again started with respect to India entering the Bloomberg Global Aggregate Index, and that might bring in some flows. And we are recently also observing rupee trading in a slightly stronger range, which is between 88.55 and 65. We keep watch on the potential flows that can arise, and that may result in some appreciation bias for the currency. On the global markets front, UK is in focus. November 26th is the budget day. Today is the CPI day. Somewhere markets are expecting a fiscal hole which needs to be filled. finances are really delicate for UK, and any misstep may cause a bond market turmoil. On the other hand, Japanese yields also continue to slightly move higher. Um, and globally, when it comes to the US market, at least, investors are awaiting the NVIDIA results. And when it comes to the Fed meeting in December, things are getting trickier because given what Fed members have already been speaking, it may seem that there may be as much as three dissenters not wanting rate cuts and three wanting rate cuts. So we'll see how this particular story plays out as well. That's it from us today. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.